It is my great pleasure to introduce the Solutions Breakaway to you this morning. Our final topic in this stream is how impact investing will be changing the way that we invest in SA. Our speakers for this topic are Sonja Saunderson, the Chief Investment Officer of Momentum Investments, and Mike Adsetts, our Deputy Chief Investment Officer at Momentum Investments. The themes you're going to hear are themes around good governance, our company view around impact investing, and of course, the very real challenges that we all face in this area. Sonja, Mike, over to you.
Thank you, Wayne, and good morning, everybody. I'm Sonja, and I will be talking you through some of our research and key trends and what we mean by impact investing. And Mike will then talk to you about how we've implemented some of this in Momentum Investments and also give you some real practical examples. Can I please ask that you post your questions throughout the session still in the chat box, and Mike and I will try and address as many of those questions as we possibly can. Impact investing is a much talked about topic in the investment industry globally as well as locally. One of the lasting impacts I believe that COVID-19 is likely to have is that there currently is, and it will continue to be, a heightened sense of how we invest, what the impact on the society and the environment is, and how to be more responsible when we invest. It is also already refining the way in which we think about investing in the future as investors really start to question the purpose of their investments along with the return of their investments. The fiduciary context has really evolved beyond just the traditional risk and return delivery to also ask about the impact of the investments. But what is impact investing, and does it come at the expense of returns? ESG really means using environmental, social, and governance factors to evaluate companies and countries, and any investment for that matter, on how far advanced they are with sustainability. Once enough data has been gathered on these three different metrics, they can then be integrated in your investment decision-making process to decide whether to invest or divest. This also affords us as an industry the ability to evaluate, vote, and influence environmental, social, and governance aspects of businesses we invest in. But is this really enough? Is it really enough to only on a secondary basis be able to influence business and society? As the spectrum of sustainable practices have evolved, investors are wanting to see much more of a direct and a real impact of the investments and have much greater control over the effect and true impact that the investments are having on society and the environment. There are therefore likely to be several trends that we'll see in the future, but two that I'd like to highlight. First of all, there will be a greater line of sight on ESG matters and how it's implemented within portfolios. Secondly, as investors want to see the real impact of the investments, the interest and demand for alternative asset classes that moves us away from the traditional asset class space in general, and then specifically real asset classes will definitely increase. So let's look at what impact investing is in a nutshell. I like this definition from the Rockefeller Foundation because it's simple and yet profound in its meaning. You can read it with me. Investments intended to create positive impact beyond financial returns. It really explains impact investing as the application of working capital with a very explicit and focused intent to generate social and/or environmental impact, and it goes far beyond just the traditional financial returns that one would in any case expect of any investment. I think for a very long time, the focus has really been to justify the trade-off between generating returns and trying to do good, and it doesn't have to be a trade-off. Fortunately, the industry has now long since debunked this myth by showing that close to 2/3 of all research on this topic globally now finds that there's a positive relationship between financial performance and sustainable investing practices. In fact, Deutsche Asset and Wealth Management have done a study where they, for instance, showed that only 10% of studies display a negative relationship between financial returns and sustainable investing. So really overwhelming evidence. Unfortunately, the consumer has also spoken. Looking at this graph, you can see that globally the uptake has been tremendous. In fact, the uptake shows more than 300% growth in assets invested in targeted and in ESG investment mandates over the last 8 odd years. This is from a report compiled by the Forum for Sustainable and Responsible Investments, but other studies support a similar trend. And of course, we know that in South Africa, we're a little bit behind that curve, but we certainly have seen a similar trend in terms of the demand and a want for ESG and sustainable investing practices. If one then combines this sort of consumer-driven demand with where regulations are in any case likely to take us, and also the presidential push in South Africa for infrastructure themes and investments, then this particular trend is likely to stay with us and also become a local phenomenon. Although in South Africa, the impact angle has therefore squarely been placed on the infrastructure themes for very valid reasons, an interesting perspective is what I show on this chart, and that is that impact investing globally has a much more diverse sector focus and therefore also potential. To illustrate this, let's maybe talk about that top one there, to get a sense of the richness of the factors to consider when thinking of impact investing. If we're looking at the demand for impact investing in food and agriculture, then there's certainly been an interest in sustainable food systems and agricultural chain growth. The sector itself has seen increasing high demand for impact investing into opportunities in food, farming, forestry, and the likes across many different asset classes. It is no surprise as agricultural land currently occupies an estimated between 40 and 50% of the planet's total land surface. And forces such as wanting food security and wanting to eradicate hunger globally are all creating pressures to transform uncultivated rural land into productive agricultural use. On the other hand, you can also say, well, there's also a risk in that because we know that forests are threatened by agricultural pressures. We know that forest is very important from a biodiversity perspective. In fact, the second most important next to the oceans on our planet. And they are particularly vulnerable to the fact that they have to make way for agricultural development. And this puts a lot of pressure on our carbon and climate footprint going forward. And of course, in South Africa, we've got our very own unique set of drivers when it comes to issues such as land reform, agricultural space, and food security. So these are all considerations for the future. So clearly, there's a multitude of opportunities through many different sectors, and it is critical to evaluate all of these factors and the interplay between all of these different aspects when one makes impact investing choices. Our experience at Momentum Investments has showed us that it's critical before even venturing into the impact investing space to have a sense of the measurability thereof. Our global partners at Robeco, who are really world-renowned in the ESG and sustainable investing space, in fact, highlight three different aspects or critical components of impact investing. First of all, the intentionality thereof. Secondly, the return that comes with it. And then thirdly, the measurability as the most important components. One simply needs to be able to measure and monitor the benefits of ESG and impact investing for it to become real and tangible. There's way too much impact washing in the industry. If you haven't heard that term before, let me briefly explain it. That is where the investment manager tends to do traditional investments, risk and return, everything we were taught at university, but they sort of dish it up and dress it up and market it from an impact perspective. And although there may be impact to what they do, it's a secondary or the third level impact, and it wasn't an intentional outcome. To make sure that you are not part of the impact washing side of the industry, measurability and monitoring over time is extremely important. Of course, there's a lot of ways in which you can measure it and monitor it. There's not one definitive way, but it has to be associated with what you are trying to achieve. So measures like job creation, carbon emissions, the number of households affected are measures I'm sure you all would have seen in the industry before. And on the slide here, I'm showing you a graph that we've done using the MSCI system to effectively monitor how well we've done the ESG integration into one of our portfolios. A simple example, just an enhanced passive portfolio, and we're measuring it versus the benchmark. Now, I'm not expecting this to do too well from that perspective because of the passive nature thereof, but that little blue dot that you see there shows over time how we can measure how well we've improved the ESG quality of our portfolio according to various measures on the screen and how we consistently manage to do so. Various aspects like how well carbon risks are minimized or how governance risks are addressed can, by example, then also consistently be measured and monitored and interrogated over time. The point I'm making is not so much that this is the definitive way to measure ESG and impact investing, but rather trying to highlight the importance of having some sort of a standard framework by which you can monitor and evaluate how well you are doing in terms of your sustainability practices. We talked a little bit about real assets before, and it's linked to the growing impact angle. It may be good just to clarify a little bit what we mean by real assets, as it's a unique investment asset class, and it covers an array of physical assets such as real estate, energy, solar, mining, and agriculture. And of course, as we said in South Africa, infrastructure opportunities as well, such as transportation and telecommunication infrastructure. Real assets have an inherent physical worth. Real assets differ from financial assets that traditionally are in portfolios and that we all know well, in that financial assets get their value from a contractual right. And this is typically an intangible. So there's a lot of focus on infrastructure in South Africa, no surprise given the number of years of underinvestments. And it's therefore also become the cornerstone of the presidential prerogative to restart and kickstart our economy after COVID again. Not only will it have that particular societal and economic benefit, but there's also real return benefits for a portfolio by virtue of the diversification, nature of this asset class, the uncorrelated nature of this asset class to other asset classes, the inflation protection it provides, as well as things like favorable tax treatments. How does one then, with this backdrop, decide where to focus and what the right investment opportunities are from an impact perspective? As we believe there'll be much more of a focus on what you are trying to achieve, how you are trying to achieve it, and how to get there, it's good to have some sort of a guide to start with. The United Nations has put forth 17 sustainable development goals that start addressing and better honing the what of ESG and impact investing. Globally, there's a convergence happening towards these goals, and it really creates a sense of unity, purpose, and also focus that helps drive sustainable practices at a much larger scale. You can read what they are in your own time, but you can see that ideals like quality education, gender equality are certainly something that all of us would want to support. Obviously, one cannot do this equally well in all aspects, but it is therefore important to decide which of these goals you want to target, how you want to target it, and then balance it with the risk and return on behalf of investors. Mike will therefore talk you through how we at Momentum Investments have chosen to tackle the sustainable goals from our perspective and how we practically have implemented a lot of these practices in our investing landscape. Over to you, Mike.
Thanks, Sonja. Sonja has introduced the Sustainable Development Goal, and me, Mike Adsetts, I'll just start unpacking a little bit of our focus area and how we want to try and measure and present it to our investors. So what are we particularly interested in from an impact perspective is good quality education, affordable and clean energy, decent work and economic growth, and industry innovation and infrastructure. Now, the great thing about impact investing is that there's a clear line of sight between the intent of what you're trying to do and the specific outcome you're going for. And ESG is tightly integrated into an impact investing approach. The good news is that Momentum Investments, we have been doing a lot of projects and investments that meet the requirements from an SDG perspective and ESG perspective. So what we want to do going forward is start honing in and focusing and presenting evidence so that you as our clients, investors and potential clients and investors can start seeing in a consolidated format all the initiatives and intent of what we're trying to achieve. So to that effect, we've launched recently our stewardship report, which is rich with both the principles and practices of what we are trying to achieve from an ESG and an impact investing perspective and other ESG initiatives, and is going to become an annual institution. And it's going to be the place where we present all the evidence, the good, the bad, and the ugly, in terms of our journey from a responsible investment perspective. We've got a long and proud tradition of impact investing and ESG within Momentum Investments, and you might not be aware of it, but Momentum has invested in the order of 1.6 billion Rand in renewable energy projects. And that spans a full range from solar initiatives and wind initiatives. Also, in many of our commercial property developments, we have installed solar panels to address both the need for continuous energy in an energy-constrained environment as a result of the troubles that Eskom is experiencing, but also in a clean way to meet the objective of developing clean, sustainable energy for our investors. One of the most exciting initiatives that we're currently working on is our student impact initiative, where we've concentrated on developing quality student accommodation. And the reason we've done this is we've both identified education as a key initiative that we want to support in the economy in general, but we've also realized that for good educational outcomes, you do need quality facilities. Now, the more affluent students, thanks to the resources of their parents, will have the ability to rent student or flats or stay in res, but typically the lower LSM students that are dependent on National Student Financial Aid Scheme grants won't be able to. So our Momentum Student Accommodation Impact Fund is focused squarely on those students in the price range of about 5,000 Rand per bed to create quality education to help them in their educational pursuits. And one of the initiatives that we're very proud of and we've got a long-standing history in is good governance. And from a proxy voting perspective, we are active shareholders and we have an extensive engagement program in place to ensure that there is good governance within those investments and entities with which we invest. As an example, in pursuit of good quality and strong institution, we've got our state-owned entity lending program. And effectively what we've said in that place is not all state-owned entities are equal. There are definitely some that are better than others. And we're not going to take a blanket approach of either investing with them or not investing with those entities. We're going to do it on a case-by-case basis. And in a nutshell, what we're looking for is both good commercial terms and viability from our investments, but also sound and good governance. Because obviously, the better the governance in those institutions, the stronger that institution and the healthier that institution will be over time. And it's something that we're proud of and want to support extensively in terms of how we allocate our capital. But our ESG program is far broader than that. And what I'm very proud of is that it does get encapsulated within the stewardship report. One of the other areas that as a South African-based investor that we're critically aware of is that within a limited investment universe, there are some things that we can do and some things that we can't do. And generally within small South African markets, exclusion is quite difficult to achieve. Practically, the one notable exception would be in Sharia funds. Now, this is where we do like global partnerships, and we've got a strong partnership with Robeco, who have a proud and strong heritage and pedigree in the ESG space. And one of the initiatives that we're working with them on in our global equity portfolios, or that component where they manage factor equity portfolios of us, is to put filters on top of those portfolios, because in an environment where there are thousands of stocks to choose from, it's far more possible to adopt an exclusion approach. So what they are looking at is issues around de-intensification of carbon in the portfolio, something that practically is very difficult in the South African environment because our economy is so critically dependent on carbon infrastructure, energy, and industry. So this is also one of the aspects that we look at quite intently. Obviously, we as Momentum Investments stand for the principle, good sustainable principles. Yes, we're signatories to the UNPRI. So I just want to quickly introduce a video clip that will be flighting after my talk. And that's going to focus on some of the practical aspects of what we've been able to achieve. So you can actually get a look and feel of the investments that we have undertaken on behalf of our investors. Thank you.
We're all part of one world, one planet, with finite resources in a complex and interconnected ecosystem that sustains life. If we're to move forward together towards a sustainable future, we all must take responsibility, every person, country, and company. As an urgent call for action by all in a global partnership, the United Nations has identified 17 Sustainable Development Goals, principles for all of us to live by and aspire to achieve for a prosperous future. We have committed to building and growing sustainable developments for all, by constructing investment portfolios that not only deliver returns for our shareholders, but also help build a future we can proudly hand to the next generation as the caretakers of our shared future. Responsible investing is part of our core beliefs, and sustainable and responsible investment practices are material factors underpinning our long-term success. Responsible investing practices have always resonated with our outcome-based investing philosophy and the alignment of our clients' long-term goals to positively influence the world they will retire to. We realize environmental, social, and governance, or ESG, risk factors affect the sustainability of companies, and therefore it is especially relevant to our investment decision-making process. We've moved from not only doing well, but also doing good. We take this very personally. We know that we must invest to combat climate change, but that every rand invested can also make a difference in the lives of ordinary South Africans and the communities they live in. We follow an integrated approach to ESG, and this balancing act is what responsible investing and our job as responsible investors is about. Investing has to be a win-win-win scenario. The only way to manage this successfully is by putting our heart and soul into it. The 17 United Nations Sustainable Development Goals are more than just a passing trend. We are supportive of these goals, and we will have a heightened focus on several of them. They are intricately woven into the fabric and ethos of our company, and all the people who are on the shared journey with us. This is what we believe in, what we stand for, and what we stand up for. Rise Student Living allows our clients to invest in projects that build affordable student accommodation, in bold, distinctive designs, and with built-in functionality that all works together to give our next generation of leaders their best opportunity to fulfill their dreams. Our investments in sustainable and renewable energy forms are not only a commitment to cleaner energy, but are a way for us to deliver great returns and future-proof investment strategies to our clients. Businesses and companies create employment. They feed families and they grow economies. As part of our commitment to decent work and economic growth, we work alongside growing businesses to build the future of our economy, to create jobs and to work alongside employers to give dignity to all. Our investments into commercial properties, shopping centres and business properties not only gives great satisfaction and excellent returns, but also helps uplift communities and create the spaces where the wheels of commerce can turn smoothly. We want investors to do well and do good. We support responsible investing to help create investments that are good for clients and the world we live in. We're here to help clients achieve their goals on their investment journey. Because when it comes to sustainable investment growth, for us, it's personal.